What's up, you guys? Welcome back to my channel. Today, we are going to be talking about the US dollar, and I'm going to be giving you guys some trade ideas very specific to what we see happening right now and why I think that the US dollar has the potential to continue this upward trend that we see, and that this very well may just be a pullback. Now, stay with me. I'm going to go through sort of my fundamental thesis as well as some technicals, and by the end of this, I'm going to share with you some of the trade setups that I am taking myself. So stay tuned till the very end, and hey, if you want more of these type of videos, make sure to like the video down below and subscribe to the channel if you're new here. Okay, so DXY. So we're looking at the US dollar index. This is basically a conglomerate against multiple different currencies in one form or one chart. So you've got the euro thrown in here and the yen and the pound and that sort of thing. So this is just sort of an overall look at the US dollar, which you can see in the last few weeks has really been taking a toll. Now, I want to say one thing, that during this time, there's actually been some good US data. We had retail sales come out. We had a couple different things that actually looked sort of dollar positive. However, we continued to see the sell-off, and I wanted to talk about that. So I think that this rally recently was very, very impressive. We saw a clean break and sort of saw a longer-term reversal, or at least arguably one here on the US dollar. So we had this really dominant sell pressure throughout 2020 for the most part, and then 2021, we've sort of shifted into what seems to be a more bullish US dollar atmosphere. Now, one of the biggest reasons that I'm going to say for the US dollar here is that the vaccine rollout and the stability of, being past elections here in the United States has been a big thing for stability in the US dollar as well, right? People usually want to stay away from economies that are volatile or, less than appealing in terms of stability, right? Well, the US dollar has sort of become a little bit more of a buy here just because we've had a shift away from that. On top of that, again, we've had some of the faster recovery phases here in 2021, especially compared to some other places like Europe. We've had some much more, or at least arguably, we are perceived to have a better vaccine rollout at this time, which does impact GDP. As I've talked about a few times on the channel, faster vaccine rollouts equal a faster grow in GDP. Right now, that seems to be the dominant thought and dominant headline sort of the news when it comes to valuing economies, right? Because you've got the vaccine rollout. If it's good, it gets more people to work, and GDP should rise with it. And that's sort of what we've seen in places like the UK and the United States, which have had sort of better vaccine rollout programs, or at least arguably compared to Europe. Okay, so with that said, I still expect that to continue. I still expect the US dollar and the US bonds to become, or the UST, right, the US Treasury rates to go up. Now, that is, again, because you have to think when people are thinking about parking their money somewhere, they got to park it somewhere, and it seems like the US has been outperforming, and I think probably still will compared to many parts of the world. So in that respect, I think that the US is still undervalued. The US dollar is still undervalued, and I think that we have room to rise. Now, I could be completely wrong about this. So before I go further, I just want to say this is not financial advice. I'm not telling you what to do with your money, but I do think that the US dollar here is on track to continue to do well in 2021. And I think that this pullback may offer some good trade setups. So without further ado, now that we've talked about sort of my fundamental bias as to why I think, with rising bond rates and that sort of thing, and an overall outperformance, I think that the U.S. is set to continue to outperform, and basically I'm going to be looking for U.S. dollar longs. Okay, so now let's talk about some trade setups. And the first thing I want to say is that I have this trend line here formed. Basically, I just drew it along the levels here and basically said, okay, well, it seems like price is pulling back nicely. I do want to say that concerningly, we are below the 200-day moving average, which is usually something that would dissuade me from getting long. But again, this is me trying to take a little bit more of a speculative move here, sort of trying to call the beginning of this trend a little bit sooner. So I do think that it has opportunity. So let's go ahead and look at some of the trade setups that I am personally interested in. Okay, so the first one is going to be dollar yen. And dollar yen is very, very much interesting to me because this one is probably the number 2 slot. Number 1 we're going to look at in a second because I actually have a trade on the number 1 slot. So we're going to take a look at that in just a moment. But the number 2 slot is dollar yen. I think that the yen is an interesting character to go up against the dollar because when we're talking about these two currencies, when we are looking at them from a fundamental perspective, what we usually see is the yen get favored in times of uncertainty because of their sort of stability, slow slow and steady economy. That being said, that also tends to mean that people sell this thing in times of super optimism and bullish market environments because of an anticipation that they're not going to grow super fast. So in that case, we would probably sort of be long on the US dollar, which is the current environment that we are in. So we are in recovery. We are in a sort of bullish, positive market environment where, you know, people are optimistic and people are looking for yield over safety, if that makes sense. So they're looking to return something. Again, this is the currency market that we don't usually talk about here on YouTube. A lot of times you just see people talking about getting rich quick and technical analysis, and that's the only thing that they'll ever talk about. But I'm going to try and bring to you guys the what's really going on, right? The Japanese yen isn't a currency that people can store their money in their banks, or they can choose to go somewhere else. And again, when things are really good, usually people choose to go somewhere else, like the US. So, you know, if you want to buy US stocks, if you want to buy US bonds, you have to do so in US dollars, right? So if you want to do that in US dollars, you have to transfer money from somewhere else. And a lot of times people use the yen as a borrow currency because of its negative interest rate. So that means right now, I believe the Japanese yen is minus 0.1% interest rate. So that means that, you know, their currency, you're actually, if you stick your money in their banks, you're devaluing your money over time, arguably, right? But then you have the US, which is, I believe it is 0.25%. And they've been outperforming. So when you look at just it from a perspective of interest rates, right, there's a natural flow here from people selling the yen, getting rid of the yen, and buying the higher yielding interest currency, which is the US dollar, right? So that is that. There is one more thing I want to say about the US dollar is that the Fed has said that they don't want to raise rates until 2022. We've seen them say such things and then change their mind in the past. But again, that's going to be based on inflation. If there's a rapid rise in inflation, they very well may raise rates. But the goal, I think, for the US is over time to raise that rate anyways. And they probably will do so sooner than Japan. You know, Japan has mentioned that I think it's like 2024 or 2025 that they've mentioned raising rates. So, you know, I don't know that's off the top of my head. I could be wrong about that, but they have no interest in the short term in raising rates. So there's that natural flow of money towards this direction. Anyways, from a technical perspective, all that to say, the idea here is that, you know, if we draw some fibs in, we are sort of still far away from the 38.2. If you drew it like this, though, if you drew it, you know, the thing about fibs is you can draw them different ways. In this case, you're down at the 38.2 already. So that's, you know, not super helpful. It kind of just depends how you drew it. But in terms of a moving average standpoint, I did want to point this out. You've got a nice little crossover here of the 100 above the 200, sort of just a show of short-term kind of picking up and looking long. You've got this trend line also that I wanted to point out right here. That seems to be where we're at right now. So honestly, I think the dollar yen by itself is probably a good trade. Again, like I said, you guys, I can be wrong about this, so please don't go taking giant trades just because, you know, I talked about it. But this is the idea that I have, is I think that this has the potential to, you know, maybe chop around, but ultimately continue that upward buy pressure on the US dollar. So that is that. I think that, you know, this is one level. I think one more level to highlight on the buy side for me would be not till a move down here. So if we really saw a pullback on the US dollar, we've been seeing a pullback for the last 2 weeks, but if we saw a real big one, a pullback here might actually be appetizing, especially if it lines up with that 200-day moving average. So keep an eye on that. And then I had one more thing. Oh, yeah. So with this, right, if price were to pull all the way back there, you have a beautiful setup at the 61.8. So from a technical and fundamental perspective, I really like that dip. If that were to really get dipping there, I would say that there's probably some good value at that point. So I'll keep an eye at that. But I think, you know, even at the 38.2, this area right now, it's not the worst area ever, in my view, to be long on dollar yen. As always, like I said, not financial advice. So let's keep going. And I want to show you guys number one. So this is my number one pick. I'm actually long in this trade right now. I shared this with members. Let me see if I can pull that up for you guys. So all the trades that I end up actually taking, I share inside of our private group. And yeah, so let me show this to you guys. There we go. Okay, so I basically said, I'm going to read it for you. So I basically said I'm liking USD Swiss on the long side. I said this yesterday morning, and I said I like getting long here on the fresh dip. So on the technical side, I said on the daily chart, I'm risking about 50 pips, which lines up well with the ATR, the average true range, which I'll show you in a second. And then I like this pullback to a demand zone in the combination with the 61.8 retracement. So I like this level a lot. So there's a couple different fundamental and technical things here. But the one more thing I wanted to add with the Swiss National Bank is that they've actually mentioned that they have plans for currency intervention, which is this concept where they are purposely going to try and devalue their own currency for the positive impact it could have on trade for their economy. This, tied with what I believe to be a fundamentally strong US dollar, could lead to USD Swiss doing well. I remain bullish on this pair. Okay, yeah. And so then I sent out my trade with the entry and the stop loss and all that sort of stuff. And so, yeah, so I think that one more thing, like I said, so the Swiss National Bank, they basically said they have plans for currency intervention. One of the reasons for that is because if you weaken your own currency, the thought process is that by weakening your own currency, you help your exports, right? Because if your currency is weaker, I always give the example of China. If you're looking at China, right? China, they have a weaker currency than a lot of other places. With a weak currency, it allows them to, here's China. And here's the US. Well, it makes it so that if they have a weak currency, I don't know the symbol for them. I know it's, okay, so, and then you have a strong, or let's say expensive currency, right? What happens is it's easier for the imports for this country to buy these products, right? Because it's much cheaper for to buy something where their currency is weak, because you're saying, well, my dollar goes a lot further over in China, so I can buy a lot of product, and that's very good for their economy, right? Because if they have a lot of demand because of their cheap currency, then it's good for manufacturing and production and GDP, right? Well, the Swiss National Bank has basically come out and said, we're going to try and hurt our own, not hurt, but, devalue our currency so that we can remain a little bit more competitive in the trade space. So with that said, that in combination with my bullish perspective on US dollar Swiss gives me pretty much my ideal sort of fundamental driver. So I have a bullish bias on the US dollar, and the Swiss National Bank has even said that they want to devalue their own currency. It's not that they always are able to do exactly what they want, but when they make it clear that that's their goal, it's not something that hurts either, right? So on top of that, I like this level here. It's a nice pullback here, and you've got sort of you've got some structure here. Basically, the idea, though, is I just liked this pullback. I thought that, with this being sold off pretty heavily, I think that this might be a bargain on the dollar Swiss. Now, again, these are just my trade ideas, and what you'll see sometimes is, I can be completely wrong about something, and that's okay. If this doesn't work out, if my trade here doesn't work out, I'm not logged into my broker right now, but I have a trade here risking 50 pips roughly. I'm slightly up on the trade right now. And if this doesn't work out, it's no big deal. I'll probably look for a chance to re-enter, and maybe even, I'll watch this area here. And if that doesn't work, maybe I'll bail on the trade for now. But again, this is the point of trading. It's not about being right every single time. It's about taking the trade that meets your risk criteria, meets your trade entry style, whatever that may be, and trying to go with the best sort of setups only. So I think, everything said here, these are my favorite two currency pairs right now to be watching, are dollar yen and dollar Swiss, with a long bias in the US dollar after this recent pullback. So those are my thoughts. I hope you enjoyed this video. Hey, if you did enjoy this type of video and you made it to the end, well, first, comment down below that you made it to the end. I really appreciate you guys who make it to the end of my videos, because it's really cool just to see the comments of people who are like, really engaged in this stuff and maybe as geeky about it or interested in it as me. So comment down below if you made it to the end. Make sure to like the video if you have not already. Thank you so much, you guys. We'll see you back in the next one.